I'm Charlotte McLeod with investingnews.com, and here today with me is Dr. Nomi Prins. She's a geopolitical macroeconomist, a best-selling author, and founder of Prinsights, which is a new Substack. Thank you so much for being here. Great to have you.
Thank you so much. I'm glad to be here.
Really good to be catching up with you. We're here at the Rural Symposium, and you did a great talk yesterday that I had a chance to see. So I want to focus on some of the ideas that you mentioned there. I talk about gold price drivers with a lot of people, and you brought up a point I haven't really heard mentioned a lot, or at least not in quite such a direct manner, and that was weakness in the banking system. So I want to talk about how bad that weakness in the banking system is right now, and is that essentially making central banks want to shore themselves up with gold?
That's a really excellent question. And what's interesting historically is before the financial crisis of 2008, we obviously saw weakness in banks. I was writing about it for 2 years before that, but it was kind of ignored by a lot of the market until it hit as a crisis. And that's because subprime loans at the time were showing signs of weaknesses and people weren't paying attention. And then all of a sudden we had this issue, after which gold actually rallied quite a bit. More recently, last year in March, when a couple of major regional banks failed in March, we saw a 10% pop in gold that pretty much stayed where it was. And since this time last year, gold's been up by 24%. But what we have now is this underlying weakness on two major platforms in the banking system, which I think will strongly propel other central banks to buy more gold, to hedge themselves against financial instability from the United States and not go through with 2008 again. As well as just retail as well, to diversify against this risk. One is what's happening in the commercial real estate loan market. And what is happening is actually worse than what is being discussed, far worse. What's being discussed and what I have written about from numbers that we know from banks that have had to provide some numbers is that the rate of delinquencies and defaults in commercial real estate loans is rising at a higher pace than it was for subprime loans into the 2008 crisis. So we're seeing that sign coming up again. But also worse than that, and I've spoken to a lot of industry people, is that these banks aren't doing something called marking to market or evaluating the quality of those commercial real estate loans and the collateral, the buildings for them properly. They're just kind of ignoring it. So in the wake is this situation where if one bank starts to reevaluate, they all kind of have to start looking at their books and being more open. And that's, I think, going to create a real major crisis form of condition for commercial real estate. That allows central banks, other countries to say, all right, your country can't regulate its own banking system. We really want to figure out a way to hedge against that. And that's where our gold buying comes in. So that's one making. The other major thing, also related to 2008, is after that crisis in 2010, there was an act called the Dodd-Frank Act that was passed. And what it required of banks is to create living wills or just emergency plans in a crisis. Well, the biggest four banks in the country that were big bailout recipients in the 2008 crisis, J.P. Morgan, Goldman, both of whom I worked for, as well as Citigroup and Bank of America, underperformed their living wills. So just a couple of weeks ago, the Fed and the FDIC said you've got weakness in your derivatives book. Derivatives are the things that were at the core also of making that financial crisis worse in 2008. So we've got these two things going, both of which can really perpetuate the gold buying that we've seen from central banks around the world.
Okay, really good context on the central banks and gold. And you also made a really interesting comment about silver, which was that, of course, the central banks are not currently buying silver, but they can, or at least some of them can. So how likely do you think it is that could happen?
So I think that can happen, and it is likely if we do see the bank crisis come out, if we do see a reason for the central banks that have been such rampant gold buyers recently to extend and diversify their portfolios of gold. So we know that gold has been a standard in the past. It's been a standard to the dollar, and it's gotten rid of in 1971. But it's been a currency for eons. So has silver. And in fact, in the United States, there was a silver standard before there was a gold standard. So it's not out of the realm of possibility. And it's also not out of the realm of certain central banks that are allowed to enhance or diversify their reserve books with precious metals that were or had currency value in the past. And so I think that because silver's trading at 31.32 and gold's trading right now around 2,400 because of the appreciation, silver far outpaced gold this year already so far, that smart central banks, especially in the emerging market areas where they have less sort of available cash, available liquidity, will start to consider silver to augment their gold positions. When that happens, I don't know. It's kind of related to a crisis that could be unfolding. But I think central banks are looking at that potential.
Right. I think we've got a lot of people interested in silver. So interesting to take a look at that. So yesterday, you also spoke about how the Russia-Ukraine war was really a catalyst for the U.S. and other countries to start thinking a lot more carefully about their natural resource supply chains, especially when it comes to energy. So this is benefiting uranium, copper, even silver, or it will in the future. And I wonder, so are those the best ways to take advantage of this trend, or should investors also think about more traditional forms of energy like oil and gas or even coal?
That's a really interesting question, because in the evolution or the energy transformation that is happening in the world, it's not going to be the situation where all of a sudden everyone goes to wind and solar, because those are just not reliable. Even if they were plentiful from a technological and just sort of weather standpoint, they can go down, they can be on a power grid, and then we might not have enough supply for that, then the power grid goes down. So there needs to be backup supply. Currently, that backup supply is the prevalent supply, which is oil, natural gas, coal, of course. But these things will not go away. And oil is interesting, or natural gas, because you always, if you're looking at an energy portfolio nowadays anyway, have to have some exposure to that, because those two items in particular can really be impacted by event risk, by geopolitical risk, particularly what we did see with Russia and Ukraine. So it's important to keep some of that in a portfolio. But with respect to the other forms of energy, and I spoke a lot about uranium, I've been a big bull on this cycle of uranium and nuclear energy since before the United States and the UK and other countries decided that they announced that they were going to triple their usage of nuclear energy by 2050, and they're already sort of well on the way to doubling that. In the United States, 20% of the electricity actually comes from nuclear power, and there are 93 power plants, nuclear plants, in process for being opened or built. China has 150. So we are in a war right now for nuclear power. Uranium is the commodity that basically drives. It's the resource that drives, of course, nuclear power. And what the United States did, and it took a couple of years for the legislation related to this policy to come through, and especially in the last 6 months, we've seen a lot of legislation, like big acts that are bipartisan acts that have been passed, which require the United States to look more at domestic supply sources and allied supply sources. And a very important one passed last month, which was the Russian ban uranium bill. That was being discussed in Congress, and I was involved in hearing and being meeting with a lot of the Congress people involved in those discussions for a while before it passed. It was very important to wean the United States off of that reliance on Russian uranium. And what that means is that uranium producers in the States, in Canada, allies of those countries will see more demand for their uranium instead of from Russia or Kazakhstan, which were the major suppliers of uranium before that. And that's going to drive nuclear. And so will technology, which is also a big push for the United States. Advanced technology, also a bill passed called the ADVANCE Act to support that initiative.
Right. So as you had mentioned with uranium, it took some time, but now we're starting to see all this important legislation come through. And another point you had made yesterday was maybe where we should start to look next is at critical minerals and rare earths, as legislation related to that starts to kind of roll down the pipeline. So I'm wondering, what should we keep an eye on there? When can we possibly start to anticipate this starting to come through?
Yeah, that's an excellent question, because I think, again, like a year and a half, 2 years ago, people had kind of written off uranium. It had a massive spike in 2011, and then it sort of was dawdling about for a long time before all these initiatives started, and we started seeing the price go up and double at one point earlier this year from a year before. Rare earths, I think, are the next thing for a couple of reasons. One is also with respect to geopolitics. Right now, 60 to 70% of rare earth elements come from China, and 90% of the processing of those elements is done in China. So there's a significant over-reliance on a major, often adversarial, or at least not completely allied country, in which we are in a superpower competition. And so the needs for rare earth elements are partly from the semiconductor industry and partly from the permanent magnet industry or subsector, which is used by aerospace, the Navy, the Army, the Air Force, and so forth for defense and missile systems and other things. This year, actually in May, there was an extra tariff that was put on permanent magnets. It went from 0 to 25%. So the White House has started that initiative of sort of creating a more incentive for supply to come from allied nations. I think that's going to continue. And semiconductors is a really interesting also space for some of the rare earth elements because they're required for chips. The United States actually controlled 40% of the semiconductor chip market 30 or 40 years ago. Right now it's only 10% because a lot of stuff is done in China, Taiwan, and so forth. And so they want to bring that back. And the CHIPS Act of 2022 allocated $39 billion to fund chip fabs in the United States. And only this year, again, Congress is slow. It allocates in 2022. It's actually funding in 2024 a number of fab factory manufacturing plants across the United States. And almost $39 billion of that happened really this year. That's going to really spur the semiconductor business. And you can't create a fab and not have a consideration for the rare earth elements you're going to put into the chips themselves. So the fabs are going to require copper for wiring, they're going to require aluminum and steel to build, and then the chips are going to require rare earth elements. The United States will need to have that supply locked up as well, and there is legislation that will probably pass this year in the NDAA, our National Defense Authorization Act, to actually say we need these critical elements, these rare earths, to come from domestic supplies or so forth. And one big country that is overlooked in this entire equation is Brazil. There are some large deposits of rare earth elements. I'm actually on the board of a company called Meteoric Resources, which is an emergent rare earth elements mining company with a project that is a 250-kilometer project of rare earth elements that are almost on the surface of the earth, created by a volcano 70 million years ago. And so the extraction of those is very simple. The environmental impact is very light, and the economics are very strong. And so I think the United States is going to also start to look at those things. So it's a very good time to get in on the bottom floor of a lot of these companies because rare earth elements have had a real depreciation in price. Why? Because China is driving the price down because they control it. But in the same token, they can cut off supply and the prices can go up. And so there will be, I think, a number of years of upside from this point for rare earth elements from our allies and from the country.
Right. And just on the note of rare earths companies, so you mentioned Meteoric Resources. Maybe we can talk just a little bit about how investors can go about evaluating rare earths companies, because I know that we hear all the time uranium is opaque and difficult. I think rare earths even more hard to understand. Yeah.
It's really tough. And I think in mining in general, we've all kind of gotten used to gold and less silver, but silver, copper, and so forth. These elements have been around. We hear about them. We use them. Rare earths, we do use everyone in their iPhone has about 10 different rare earth elements in it, in terms of the chips that actually create AI data and analysis and everything else. All these things require this. So, but studying how to evaluate the mines or the companies, it is a learning curve. And I think the one thing to look at, because we're in a very geopolitically tense sort of world, and we are evolving to an energy transformation of cleaner, more efficient, more sustainable methods. So I think right now what's necessary to look at is obviously the longevity of the mine. This is a long-term trend that's happening. And also how stable that mine is in its area. Does the community accept it? Is it going to have issues with city councils? Does it use sustainable methods? Are those methods economically efficient? So I think all of these sort of extra criteria will be very important in evaluating a lot of these mines outside of China where it's completely opaque, and looking at places around the world for those investments.
Okay, very, very good things for everyone to consider. And just before I let you go, are there any final thoughts that you would leave investors with?
I think the main thing, and this was actually the title of my talk, which was the real asset Big Bang, is that we are at the cusp of a, I think, major bull cycle for real assets because of weakness in banks, because I think the Fed and other central banks are less relevant with respect to monetary policy and controlling anything. And because the world's evolving very quickly from AI, data, technology, energy transformation, all of these things require more more basically resources than we've actually mined in a lot of cases. So I think the main thing to think about as an investor is some of these are long-term plays. I think uranium is a long-term but shorter-term upside play. But a lot of these are longer-term plays, and they're important as long holds in your investment portfolios.
Okay, really good note to end on. Thank you so much for coming by to talk. Great to have you again.
Thank you so much.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is Dr. Nomi Prins. Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.